What lurks in the shadows? Lying beneath the global economy is the world of undeclared income or economic activity known as the shadow economy. Both criminals and business owners can apply creative methods to avoid paying tax. So how do authorities tackle the problem? By Lachlan Calhoun. All figures in this article are in Australian dollars. Article begins. Dealing with the shadow economy is like plugging holes in a dam wall, says Dr. Michael Shaper, co-chair of the Shadow Economy Advisory Forum. No sooner is one hole plugged than another hole appears in another section of the wall. There are always people in the community, he says, who will do whatever it takes to avoid paying tax. And they are creative and entrepreneurial in their methods. The rise of cryptocurrency, for instance, has created a new world of opportunity. And while high taxes on tobacco products might deter smokers, they also offer an attractive margin for tax evasion. Other leaks are sprung inadvertently, largely from small businesses and sole traders who do not understand the systems and for whom compliance is just too hard. For this group, a big part of the solution is for the government to make it easier for them to do the right thing. Dr. Shaper says, in the big picture, the research shows that if you've got a well-regulated and well-policed, largely corruption-free economy, then you're probably best placed to deal with the issue. To use the dam analogy again, the good news is that the dam wall has been increasingly fortified in recent years. The move to digital and traceable payments, combined with regulatory measures such as single-touch payroll and momentum for electronic invoicing, has encouraged compliance among small businesses and reduced the opportunity for leaks. Cash is the shadow economy's big opportunity, and the percentage of cash payments has fallen from 40% in 2007 to about 25% today. Dr. Shaper notes, what we find is that people move out of the shadow economy when they find the cost of trying to avoid the regulators is too high or just too difficult. Australia's understanding of the shadow economy has developed considerably since the Black Economy Task Force reported to the government back in October 2017. That report observed that the size of Australia's black economy may have increased by up to 50% between 2012 and 2017, and that it could be as much as 3% of GDP, or approximately $50 billion. Since then, the approach and name have changed, as have methods of calculation. The most recent analysis by the Australian Taxation Office, the ATO, shows that it is missing out on collecting just over $33 billion in taxes each year, meaning that 7.3% of the national tax is not collected. Of this tax gap, the ATO estimates that $11 billion is missing in taxes due to the shadow economy each year, plus $3 billion in hidden wages. If accurate, this makes Australia's shadow economy one of the smallest in the world. A 2018 report from the International Monetary Fund estimated that Bulgaria's shadow economy accounted for 19.2% of its GDP, while in Turkey, Croatia, and Romania, that figure is 17%. According to other reports, Zimbabwe's shadow economy is the largest at 67% of GDP. Some of these countries are tackling the issue, others are not. Italy, Spain, and some European countries, for example, have introduced limits on cash transactions. In Singapore, GST on transactions is reported at the till, while in Indonesia, the promotion of digital currencies is a key policy both to enhance liquidity in the system, but also to limit the opportunities for the shadow economy. At the ATO, Assistant Commissioner Shadow Economy, Peter Holt, explains that the downward revision is caused by categorising missing funds as those that have a tax impact and those that do not. Counterfeit goods, illegal gambling, and illegal drugs do not have a tax consequence, so they are not factored into measuring the shadow economy tax gap. Holt believes that the size of the shadow economy has stabilised in recent years, but echoes Schaper's dam wall analogy. You push one area of the shadow economy and it can pop up somewhere else, he says. In the current tight labour market, for instance, there are anecdotes that workers are being offered cash incentives to change jobs. Some workers are also asking for cash payments as a condition of staying in or changing jobs. Holt asks, but where is the business owner getting the cash from to be able to pay workers in cash if it's all off the books? Previously, some would have been taking cash and not declaring it as income, and sometimes employees are paid in cash to avoid tax obligations relating to employment. Now we are starting to see a shift from employers and businesses taking cash to the workers being on the demand side of cash. A clearer picture would come from ATM cash withdrawal data, but this data is not yet available. Macro-level data from the Reserve Bank of Australia, however, suggests that an increased amount of cash is entering the economy, which may indicate that shadow economy activity is ramping up. The ATO also accesses data from financial institutions to identify unexplained wealth. Holt says there are three types of activity in the shadow economy. First, are criminals intent on avoiding tax. To deal with them, the ATO partners with law enforcement authorities on the Serious Financial Crime Task Force. Next are small business owners who omit income deliberately. Key sectors there are building and construction trades, transport and couriers, cafe and restaurants, personal care industries such as hairdressing and nail salons, and home cleaning. Last are the small businesses that simply make mistakes. These last two categories are managed by the ATO's dedicated Shadow Economy Compliance Program. It's sometimes difficult to distinguish between a business that's just not keeping good records because they are time poor and those that are concealing income, but we do make that distinction, says Holt. Digital tools are part of the answer because they enable the better reporting of transactions and better record keeping. For businesses trying to do the right thing, this helps their tax compliance, but also has a beneficial impact on managing the business. Accountants play a key role in this, both in educating their clients and using their systems to enable better compliance. Several legislative changes have also helped the ATO in its efforts. Legislation from the previous Parliament banning the deletion of sales records without an audit trail has made a difference, as has a second legislative change on the reporting of payments to contractors. This has enabled the ATO to better follow the money trail and identify where contractors may be failing to report income. A third piece of legislation that will come before Parliament soon is on the sharing economy, so that people will be legally required to report any income they receive from platforms such as Airbnb. Of these, says Holt, the legislation on contractors has been particularly important in an economy where the percentage of people on PAYG wages is decreasing and contract work is growing more prevalent. Holt notes, we can now reconcile payments to your contractors, and we check what the contractors are returning in their tax returns. In 2020-2021, this provided visibility on $368 billion in payments from 170,000 businesses using over 950,000 contractors. It shows us the supply chain on all these subcontractors and is a very significant shift in giving us the visibility of payments to contractors. Beyond legislation, Holt also sees a cultural change in Australian society. In the past, people might not use the ATO tip-up line, even if they had valuable information, because they didn't want to be dobbers. Today, there is greater understanding that people who avoid taxes are receiving an unfair advantage with what is essentially uncompetitive behaviour. The fact that the hotline fielded 43,000 calls last year attests to this. I do think community morals can shift, and that will reduce the overall shadow economy activity, says Holt. more taxes collected means more money for better services, or that governments might actually reduce the tax payable because everyone's paying their fair share.